Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, guys. Well, at the end of the week, I think we got a good weekend ahead of us. Soon will be spring. Not quite. I mean, March is still... I think we still got one big winter storm left on us, but things are kind of shifting and the markets are, man, all over the place. Lots of interesting things happening, although it is range-bound. I think this is the most interesting I've ever been in such a range-bound market. Let me show you what I'm talking about. So here we got in the treasuries yesterday, you know, they kind of pushed up against some of this resistance here, but it ultimately failed, and so we got a pretty good little scalp off of that to help our swing trade. Overnight, they made another attempt that appears to be failing. That one, you know, some of that kind of makes me think there is news out there, but I didn't really see anything super big, although this kind of like jump and move back down was not listed in any of my like overnight synopsises, so that's kind of interesting. You come over here to the S&P 500. They did pretty okay yesterday. It kind of looks like it wants to continue moving up, but they are kind of starting to struggle here in the S&P 500. But I mean, look, this has been like a 4 or 5 day mean reversion and then a big strong move up yesterday. By the way, the action going into the close in the S&P 500 was absolutely insane. There was like a 10 to 15 point jump on the market on close orders, which then was completely erased by the end of the session. I'd never seen anything. I mean, I've seen a lot of really big end of month closes, big market on closes, but that one was particularly jarring for me. So, really big end of month close yesterday. Oil maybe pushing to new highs. Gold and silver doing pretty good as well, even though the treasuries seem to be kind of a little bit pressured. So I think we are seeing some overnight geopolitical tension. Copper still, you know, China's still struggling over there. The dollar looking a little bit stronger today, back above 104. And the Bitcoin having done absolutely insane things earlier in the week, kind of trying to get the bull run going again, but not quite getting there as of yet. So that is basically where we are at this morning. We, let's see here. Let me double check here. Okay, we do have Fed's Barkin is starting to speak right now. Although I believe he spoke yesterday, so I don't know if that one's going to be a super huge big deal. We do have S&P manufacturing PMI, and we get University of Michigan numbers. There is some indications from other numbers that we've gotten that consumer sentiment has kind of been hit in the last month. So, you know, those Michigan numbers will be interesting and will probably be pretty market moving. And then we get more data next week and we kind of move back into the beginning of the monthly cycle again. So I think other than the news, I think that it'll be pretty quiet up until we get the news. But we'll see here. I kind of getting this feeling that somebody desperately wants us to move up. I wish, so I had it where I was like, I had the contract up here at like 8, was it 18.5? I think it was at 18.5. And I wanted to take it back off below 08, which was where I had my previous position from. And it didn't do that, and I wasn't going to sit and wait overnight. If I had waited overnight, I think it might have touched. It would have been close. Yeah, it would have been close. I'm going to say it wouldn't have. So we're probably okay. And if they move back up, that might give us the opportunity to try it again. I don't know. We'll see. Oh, yeah. It's time for us to roll over too, huh? Okay, so if this one was G, I believe April is H, right? Or sorry, March is H. Not April yet. April is J, right? I do not understand the month codes at all. Like why they picked the letters that they did and stuff. It seems kind of nonsensical to me. But whatever. I was kind of hoping that maybe the liquidity in March would be a little bit better over here in the 2-year, but doesn't seem like it is. Elon Musk gets OpenAI with breach of contract lawsuit for abandoning foundational mission. Yeah. And the SEC is investigating them too. I think that whole situation has always kind of bothered me. So I'm glad they're looking into it. Yep. In reality, OpenAI has been transformed into a closed source de facto subsidiary of the largest technology company in the world. True. They abandoned their mission. Well, Fed's Barkin is saying stuff, talking about wage pressures and so forth. He just think the market's not really reacting because we have already heard from him lately.
Block sell.
Okay.
Block buy.
Okay. Fed's Barkin just says that the Fed is not trying to meddle with the markets. And when that happens, there was a big sell followed by a big rise in the Treasury market. What the F? Oh my gosh, that is one of the funniest reactions to a Fed speaker I've ever seen. Oh my goodness. Wait, I'm waiting here on Twitter to see like what the exact quote that he had was. It'll be funny if they move down. Yesterday was a high inflation report. So Forex Live pointing that one out. I suppose it might not be the thing that I was hearing on the news squawk that they were reacting to at the time. Bloomberg, a Fed held hostage by data is asking for trouble. You know what? I kind of, well, I don't know about the specifics about the situation, what argument they're making, but I do kind of wonder if it's a bad idea to say, oh, well, we're just going to wait for the data. I think that the market tries to be efficient. So whatever they say, whatever the Fed says, the market tries to price in. And so because of that, if you just wait for the data, you'll always be behind the curve, essentially, right? So I think that there are situations where the Fed has to be proactive, and this may be one of them. I really question this guidance that they seem to be giving, that like they're going to cut interest rates, because I see some pretty wild froth in this market. We'll see if there are rate cuts this year. Well, the market has come back to break even. They're probably going to start becoming more sensitive. You know, I thought, oh, well, we've already heard from them. They're not really. Then he said the right thing. I think it was that we're not trying to meddle with the markets, but maybe it was something else. Now all of the robots are going to start paying close attention to what he says, right? Okay, a little bit of a rise here. Love how Financial Juice is starting those posts. Fed's barking, yeah. Do you trade the UB? No. Too rich for me. I tell you what, I've seen a number of traders come through here. You know, every couple of years we get one that they trade the UB, and they do really well at first. But that, you know, I kind of feel like the treasuries are a little bit vengeful. Like if you make money on the treasuries, it feels like they're immediately come back for you. And man, when UB does it, you just get buried. So yeah, UB like placing live trades on UB would be terrifying to me. It's just too big, too volatile. I wish I understood more why treasuries seem so vengeful. Like, I can't shake this feeling that, like, whatever I do, the market starts fighting me on it. Like, I come in and I'm like, hey, here's like a good opportunity for a swing trade. And then when I roll over, they just fight and fight and fight over the area where I rolled over for several days. It's like, you know, as soon as you start playing that, oh, we're going to leave positions on for a long time and try and let it trend, the market stops trending, you know? Well, so I've been sim trading in ZN, practicing multiple contracts and swing positions. But most of my live trades go into the micro 10-year yields, honestly. I love it, actually. I've done so much better in my trading when I moved over to the micro yield futures and just kept it really small. Yeah, probably never going to become a millionaire doing that or anything, but I really like it. No, day trading is super hard, and I think it makes sense to minimize the risks. as much as you can as a retail trader. So, you know, put your risk into things that are tend to yield a little bit more, you know, like save your capital up and put it into swings and things like that. So I think there's a value in day trading, but you just got to realize that it's kind of a crappy trade. What's the ticker for the 10-year ZN? Yeah, ZN. So if you're relatively new to treasuries, I would strongly recommend focusing on ZN. Even if you end up trading the other ones, you want to watch ZN for the flows. ZN is the one with the most liquidity, with the most volume. It gives you the best kind of signals. Like, ZN is the one that you kind of want to watch. Maybe a little bit of levitation there again. I don't know. I'm kind of getting some signs that like they want to rise it, you know, jump it out of here. But maybe that's just a market maker playing with us because they haven't really had a whole lot of success breaking out on the upside here. And love ZN, not too slow and not too fast. So a lot of people kind of disregard ZN because it's such a thick instrument. It doesn't move that much, right? Like you notice here, we've been, you know, in the last 10 minutes, it's maybe ticked like 2 ticks, you know? So for a lot of people, like that's just not enough because they're noise trading, right? If what you're doing is noise trading, you don't really have any edge other than that your stop is beyond the range. Then you really want something that's moving around a lot randomly, right? ZN moves intentionally. Like it tends not to move unless there's a very good reason. Somebody really needs to buy or there's some news driving it. But there's some real advantages to that. For one thing, it means that you actually stand a chance of trading it and catching a good price when like really big news moving events come along, right? So it's a really, really good skill to have that ZN in your back pocket, because when the bear market comes along and all of the retail day traders are just getting slashed left and right by the volatility, you can be coming over here buying the treasury and just riding the trend up, and it's like an easy trade. So the liquidity ends up being really valuable in the end. And although it doesn't tick up and down as much, there's a lot going on still. There's always volume going through. There's always changes in the level too. And, you know, those changes, those kind of granular changes are something you can watch and that is interesting. And so the reality is that there's just as much change in ZN as there is in ES. It's just that the change is reflected in changes in liquidity rather than it actually ticking up and down like it is in ES. So ZN is great. And then on top of that, like I said, it's a very economically sensitive. So if you understand ZN really well, you're going to understand the rest of the market really well. And ZN is highly efficient. So if you build real edge in ZN, that edge is a lot more likely to translate into other instruments if you found like an actual technical edge. Because like ES and oil in particular, let's say NQ and oil in particular, tend to like deceive you. So they'll get something going and you just like hit it out of the park one day, like every little scalp seems to go your way and everything, right? And then like a week later, every trade will go against you, right? They're like fattening you up for slaughter is what's going on there. ZN doesn't tend to do that. Like ZN, if you're doing something stupid, it tends to tell you pretty quickly. So there's a lot of things, advantages to the tenure. Do you remember the Colorado Baker thing? I do. Wasn't it like somebody tried to get them to make a super pro LGBT cake? They didn't want to do that. There was a court case, and I think that the court case came out as in their favor in the end. Yeah, I never knew the cake he was asked to make was described as a large figure of Satan licking a 9-inch dildo. An actual working model that can be turned on before we unveil it. Yeah. Why didn't you bring that one? Why is that one coming up? Trading the ZN market can give us time to think and take action. That's true too. Like it's just good practice for you, right? Because the thing that will so there are some like actual chemical, psychological kind of things going on here, right? Because when you do something and it affects the environment, your body reacts to that. Like just clicking a button and getting a sound, it elicits dopamine in our brain. So the very act of coming in and entering a trade can generate dopamine and norepinephrine. And that will lead traders to want to take a lot of trades. But when you're forced to kind of wait it out and think it out in ZN, that's really the way that you want to be thinking when you're trading. You want to be very intentional. You want to be very strategic. It's on a community note on X. No. So, yeah. I guess the thing with that court case that is often not shared by the media was that they specifically like targeted that baker. They said, this baker seems to be like very pro-Christian. Let's try and screw him over. So they went and they asked him to do something absolutely ridiculous that they knew he would reject and then sued him for rejecting it. So this is something that I keep seeing happen over and over. And guys, I'm sorry for the politics, but it's Friday, so we tend to get more into cultural things on Friday. But have you noticed how many court cases you're seeing go through where like the left makes a big deal about this huge injustice and they're really trying to gaslight the public into we're right, and then the Supreme Court rejects it every time? Have you noticed how, and it's not just like when the court has been super conservative. There's been many cases like this where the Supreme Court struck it down even with when it was like 50-50, basically. I don't care to get into the issue or anything. It's just wild that I never... Yeah, well, and the media doesn't share all of those things. It's absolutely true. I tell you what, man. The news is not the same when I was a kid. I mean, there was always a problem. I remember my parents always complaining about political bias in the news media. And I remember watching, because you're talking to somebody that, like, in the morning before I went to school, I would watch the Today Show. And the first thing on the Today Show is almost always a political interview, right? So I've been following this stuff for a long time. And there was always kind of this bias in there where it was like, oh, they're letting the guys say this and this and this, and they're not pushing back or asking any questions at all. And it always drove me crazy how they would let the left guys kind of off easy, and then they would kind of grill the conservative guys and never really let the conservative guy get the message out that he was trying to get out, right? They would muddy it. And so there was always kind of this bias. But then during the Obama years, like, it really got amped up where, you know, certain news outlets were very much trying to push an agenda for a certain audience. So that was when they kind of realized that, hey, we create biased news for a biased audience, we do better, right? And then that shifted under the Trump years, and especially during the coronavirus pandemic, to just like outright trying to manipulate the audience to the point now where, like, people just don't trust news outlets. And so a lot of these really like, I want to say sophisticated, like Vice, for instance. Vice always had really sophisticated documentaries and like really deep investigative reporting and stuff, right? But nobody watches it, and they're basically going out of business. The way that media has changed during my life is just wild to think about. Yeah, I want some fun politics. Illinois also has removed Trump from the ballot, third state after the Supreme Court railed the other two. Well, they didn't rail the other two. But they did say that they were going to take the issue up, and it looks extremely likely that, you know, they're going to strike that down. But it is kind of weird, the timing of it, don't you think? Do you think that taxes will go down if Trump wins? So if Trump won and we had a Republican majority in both the House and the Senate, I think at the very least it would be very likely that the tax cuts that were created when he was president would get extended, right? They created these tax cuts and then they kind of had it roll off over time, so that it would create political pressure. And what has happened is the left has been able to largely ignore it, and so they are kind of rolling off. This year turned out to be not so bad, but next year and the year after that, it will start to become an issue. And if Republicans are in charge, I think it's extremely likely that they'll just extend them. So lower taxes, maybe in some respects. But I think it's likely to be the case that whoever gets elected, that we will still be in a situation where it's extremely difficult to get anything done. The only way that you're going to get things done is when there's a very strong public outcry and interest in an issue. So, for instance, I think that there's a pretty good chance that after the election that they'll address the immigration issue, for instance, because people are starting to get really noisy about it. Like it's turning into the number one issue for a very large portion of the electorate, right? So when that happens, the politicians respond. Hey, Anastafa, where you been? It's the same thing with going back to the media bias thing. There has been some like severe manipulative reporting on things like that. For instance, with the transgender issue, right? Like there's this whole thing where schools are like facilitating a kid's quote unquote gender transition, and the parents don't have a clue what's going on. There was one instance where this happened, and the state took the child away from the parents and gave the custody over to the teacher that had been facilitating the gender transition. So this was a biological female that was transitioning to a man, and she ran away from the teacher at one point. So what do you know, like volatile teenagers that tend to make bad decisions, even when they get what they want, they still run away, right? And then she got sex trafficked. And then after she got saved by the police, they put her in a halfway home for boys where she got raped again. And so I don't know the status of that case. Is probably going to be like a year or two before we find out how that one is going. But the parents basically sued the state, saying that if they had not taken illegally taken custody away from them of the child, that none of that would have happened to the child. And I think that they have a very good case, right? And you don't see any of that sort of perspective reported at all. They just treat it like, well, we need to protect these children from their parents. This is just absolutely mind-bogglingly insane to me. It's what kind of stupid mentality you have to. Yeah, it would have to be a person that doesn't have kids and or doesn't have teenagers, you know? It's just all over the place. It's just the exact opposite of what I thought was going to happen as a kid. As a kid, I felt that I was informed, and I felt that the internet was only enabling me to become more informed, and that we would get the populace more informed on what was going on, and it would kind of bring light to biases and things like that, and that this situation would improve. And it's been the exact opposite. It's been the exact opposite. The world and the internet and social media did not turn out the way that I thought it would at all. And it's super weird to watch. Hey Uzi, how's your trading going? Well, maybe you're asking Uzi, but for me, it had a pretty rough January. And then for the second half of February, I've been a little bit more focused on this swing trade that I've made. So I rolled it over, but the original swing trade started, it has about $800 baked into it. So this is $900 worth profit or something like that. And it's been holding pretty decently, and we have been able to scalp a little bit and add a little bit more to it. So I would say that that's a pretty big win achievement for me. But, you know, there's the good and the bad. I don't think that the day trading has been going very well lately. No, I haven't taken a lot of day trades in the micros. Maybe I'm just scared because I got I got pummeled so hard. But hopefully next week we'll have some opportunities and I'll take some. You don't trade at all at the moment? Yeah, in the treasuries, I do feel that there's been less opportunity. Like January, I think that there was some opportunity, but it was really mixed. It was really complicated and confusing action. With any strategy, there are times where it does well and there are times where it doesn't do well. And I think that is the case for informed trading as well. If you were always informed, you're always informed, then it would be different. But retail trader, there are certain times where it's just more difficult to be informed on the flows, and I think that's what's happened to me. So I've kind of had to go back to the drawing board, like, because the whole thing to me is that, like, what makes day trading, or what should make day trading attractive, is like consistency of it, right? And if there's like a 3-month period where it's absolutely dismal, then it kind of almost defeats the purpose of the day trading, right? Expenses have gone up on my end, so I'm a little bit more hesitant. Well, they have. I wonder what you're talking about. There has been like increases in data fees and things like that. It just keeps, man, every year they increase the data fees. It's just crazy. Been focusing more on your stock portfolio while you pay off this darn car. I need to think about cars more. I get this, you know. I'm having a hard time because I don't think I've come across a car that I think is truly perfect for me. I guess at some degree, I'm really easy to please. It just needs to have a killer sound system, and I'm probably happy with it. A killer sound system in 4 seats. Which is why I would rather just keep my Acura. But, the stepson is hopefully gonna have a driver's license soon. There's been some trouble because I didn't have enough spots at the school for him to take the classes or whatever, so he has to go and do it somewhere else. But supposedly before the end of the summer, he should be able to drive, and then my wife won't have to drive him to school, to and from school every day, and that will free her up a lot. And he will also be able to drive him and the other stepkids back and forth. And that will really help stepdad out a lot. Because, you know, especially there are these times where birth dad, rather. Not, I'm stepdad. But there are times where birth dad is like, you know, he's just sitting in the car waiting for kids all day. So it's usually why he has them on the weekend. But so he would really benefit. So I think what's going to happen is I'm going to buy a new car and the kids will get my Acura. Now I'm going to have to fix the Acura up because one of the headlights doesn't work. I just turned the fog lights on. Well, it's kind of on and off. So like it'll work and I think it's okay, and then it stops working, but I have fog lights on it, and so that doesn't tend to be like a huge deal, but I wouldn't feel comfortable with my kids driving that around. So I have to fix that. And the problem with that is that the headlight is actually like crazy expensive. It's like $1,000 or $2,000 just for the light, which is like, okay, but weird, but. And there's some mirrors busted up. It's fine, but it would be nice to like replace it. So I think I will fix the car up before I give it to him. And then I'm gonna have to get a new car. I kind of want to keep my balance sheet clean, but I think I am gonna have to put a second car on it. When I had it looked at, they said it was the light. Specifically, this type of headlight has something called an igniter, which is what allows it to be like a really bright headlight or something like that. And that's why it's so expensive to replace. But they've looked at it before. And like the quote that they gave me at the time was like I thought was ridiculous. But I'm sure if I go to the right place and they're able to find like a used part, because this is something that like could totally come out of a well, I don't know, junked car. I would think that maybe a headlight might be a hard part to get though, because that's probably going to be parts that are just destroyed, right? But igniter xenon, I think so. So yeah, I got to replace that part of it. But at the time, it seemed crazy to replace it. Now I think it will. I think that like replacing the headlight is like almost as much as like you get for selling the whole car, which is crazy because it's a really comfortable car, man, and it's got a really good sound system. But like the Kelly Blue Book value is only like $5,000 or something, which is crazy to me because I'll go out on like the local classifieds and look for cars that are like $5,000, and I don't find anything remotely close to as nice as my Acura. Anyways, so before the end of the summer, I have to consider buying a new car. Okay, some of these newer BMWs, and not even the crazy price ones, good speaker placement is almost everything. Well, it just needs to have a really big subwoofer. If it's a good sound system, premium sound system that includes a really good subwoofer, I think it'll probably be fine. Because what I have in the Acura is great. And it's just that it has a subwoofer in it, you know? Premium sound system in the subwoofer. But my understanding is that Acura is one of the better ones when it comes to sound. And so I keep kind of coming down to that, is that like the cars that look interesting to me, then it's kind of like, oh, but they don't have a very good sound system. Like I would love to get a GR Corolla. I think that would be so much fun. The sound system's not very good in it. And that's the second thing, is that I would really like to have a car that has all-wheel drive and is good in the snow. So like I saw at the dealership, they had this RAV4 that they had put like some of the custom stuff on. You know, like the roof rack and the ladder in the back. Like I want something like that so I can go snowboarding, you know? Put the snowboard on the top and then easy to get the snowboard off. But then you get that RAV4, kind of underwhelming sound system in it, you know? And then I look at some of these nicer cars, and it's kind of like I feel like I'm paying an awful lot for not. I don't know. Probably an awful lot, and the only real benefit that I get from it is that people see me driving in that car and go, oh, he must be doing really well, right? Yeah, most music is in the mid-bass range, and speaker placement is very important. Subs help mid-bass fill sound quality secrets, problems with vehicles. The size destroys mid-bass. That's why good sound quality is so hard. That's one major reason. Yeah, I don't know, but I mean, you can put a lot of sound dampening in the car, and you don't have to worry about reflections as much. So there's like some real advantages to car sound too. But you know, I want to listen to drum and bass, so. That's part of it. You really want something that has like a really quick response and can be really booming. I don't know. I was looking up. Did I tell you about Range Rovers? Because you know, I remember watching Cars 2, and them making fun of these British engines that they're just always going, you know, that they're absolute lemons. And I didn't get the joke until I started seeing things about how expensive Range Rovers are. So I started looking into it. Okay, they're not like crazy necessarily, but they do have some that are expensive. And basically what happens apparently, because why, if they require so much maintenance, why would anybody buy them? Well, apparently the deal is that the interior of a Range Rover is like the best. It's like bespoke, hand-threaded leather and all of this crazy stuff, and that's part of why they're so expensive. And the people that are buying them, they just own them until the warranty expires, and then they trade up again. So that's the deal with the Range Rover. That's why people still buy them, even though they like have some of the worst reliability maintenance ratings, right? It's because those owners aren't owning them for the long haul. They just switch every 5 years or something like that. Which seems like such a crazy waste, don't you think? I would like to buy one if I can, a Range Rover. Well, so like ever since I've become aware of how nice of a car a Range Rover can be, I'm noticing how many people in my area, nobody in my neighborhood, but when I'm driving around town, there are a lot of Range Rovers around here. Because basically the deal here is like there's Salt Lake City, and then there's all of the suburbs, right? And there's like the suburbs that are much further away, that are like 30, 40 minutes away from the city center. And so kind of the upper middle class people tend to live, it's called Davis County. But that's where the upper middle class people live, because they can afford to have that long drive and they get more bang for their buck further out here, right? So I wouldn't say that it's like a well-to-do area like the way that most people think of well-to-do areas, because, you know, like your well-to-do California is going to be like unfathomably rich to most people around here, right? But it is good enough that people can buy nice cars and they're floating around. And once you realize which cars are the nice ones, it's kind of like mind-boggling how many people there actually are floating around here with these expensive cars. And I'm starting to think about it like, wow. Like, it just doesn't seem like that's worth it to me. But I'm starting to lean more and more towards just getting a Tacoma truck, to be honest with you. Like, I think that I would get the newer trim. I would love to get like a Trail Hunter. Get a Trail Hunt, but I would need to wait. I'm not going to buy a new car. So I would need to wait a year or two. That taco. and you know, a Tacoma would be, you can get a 4-door cab with a Tacoma. You can get a roof rack, but you know, I can modify it all to be good for the snow. So that would fit my needs, and it wouldn't be an insanely expensive car, right? I wouldn't have to spend insane amounts of money for it. It's just I need to get a good sound system in a Tacoma, right? That's the back in my lowrider days, the old tacos looked great back to the road. Dude, when I was you know, back in 2003 or so, when I was a missionary in Kansas City, I used to love seeing, you know, that was back when people still souped cars up. Like, of course, people still will do modifications to cars and everything, but they've really moved away from the Gaudi style that you saw in like the first Fast and Furious movie, right? But back then, it was still a thing. And so it was either rice rockets or maxi sleds. And I saw some really cool maxi sleds when I was in Kansas City, man. There's some guys that, I just can't imagine. They work super, super hard. And then they put it all into their car. And I saw some really nice low riding trucks. And we always got excited when we always loved to see one of those. I saw more nice cars when I was in Kansas. That's, you know, Utah, I think people in Utah try to be modest. There is definitely still this thing, you know, like the wealth signaling. It's still a thing among Mormons, but it's like a different thing, right? So it's like there are certain things that you like. If you're getting a Lambo, that's kind of like you can see it in me, right? Like I feel like spending my own money on a Lambo would be kind of a waste. But there is this thing like I think Graham Stephan was talking about this, that it was like when he switched his car, the people would listen to him more when he was selling houses. I don't know if I'm really in that situation where a whole lot of people are going to be looking at my car, so I don't think it really matters. I think that if I was going to do anything, it would be like upgrading my wardrobe and my background to be more swanky or something like that, right? I digress. But in Kansas City, they don't have such reservations, right? And there's this area of Kansas City, on the Kansas side, the southwestern Kansas side, where they really have really, really nice areas because it's like the lowest taxed municipality in the United States, something like that. And so a lot of very, very wealthy people that can afford to live anywhere that they want moved and lived there. Like I remember the missionaries in the area next to us, they had a guy that they had baptized that was a multimillionaire, that his whole thing was he buys a business, he knows how to run the business well and develop it, and then he sells it later, right? So really, the kind of like 100 millionaires, something like that. So it was a pretty common occurrence in that area to see like a Ford GT. Like every other day we would see Ford GTs driving around and stuff like that. Or Lambos. Although over there, it's Kansas. So they're kind of more of the country loving people, right? So when they bought a nice truck, it would be like a Ford 550 or something like that, right? those absolutely monster trucks that Ford builds that I don't know why anybody would have any business buying them, but they love them. Lots of cars. Used to love flipping that switch and dropping it in motion and throwing sparks. like Ramon in the cars, but with a truck. The only time I've seen a Ford GT in person was while driving. It was right before a big solar eclipse, which the biggest last one is going right over me again. Yeah, there's supposed to be one like April, right? That's going to hit a big portion of the eastern United States. When that next eclipse comes, the media is going to be going crazy because whenever it affects the northeastern seaboard, right, that the media is all over it. And it happens in Utah, nobody cares. Happens in April, doesn't it? Let me explain. April 8th. And it's going to be centered where you live in Illinois. Ooh, yeah. Let me tell you what, man. If you've never been where there's like a full eclipse, it really is something. Like, get the freaking sunglasses and all of that stuff. It's totally worth it. It's totally worth it if you're in a place where it's a total or almost total eclipse. So normally, you just get like a partial eclipse and that's what you're probably used to. And so you kind of ignore it. But we're going to get a full eclipse and people will remember that for a long time. I've looked it up. Apparently when I'm like 65, there's going to be like a real total eclipse here in that will come right over Salt Lake City. So we'll have a special eclipse party. Mm-hmm. You know what's the other thing I want to do with my car, though? Is I really want to have like a separate set of wheels for snow. I don't know. Does that sort of a thing still apply with like a Tacoma? I don't know. But if I get like a hatchback or something, or a sedan, I want to have a second set of rims with snow tires on it, so that when it snows, I can just switch them out myself. Paul says no. So yeah, maybe I don't. Maybe I don't need to worry about that so much if we get the Tacoma. But I think, you want to pull up the stuff? Pull up the websites. This thing right here, by the way, I had to go and get the van looked at like last week. And they had this thing in there. This BZ4X. It is something else. It's like an all-electric vehicle, I believe. But especially the back of it is like, oh. It's actually a really wild looking car in person. Tacoma. We gotta go all the way down here. They have so many different trims for Tacomas too. But I think that I would just be getting a Limited, because Limited has better sound system. I don't know if it's a good sound system, but it has better sound systems. So I guess these Trail Hunters aren't available yet, but I kind of want that. That's kind of, I want the one with like, you know, the thing in the back and like the headlights on top and all of that sort of stuff. Get a Ford Focus. Boarding better for the weather. Tires keep your own safety up so much higher than should be logical. It's really funny to me. Because there's people in Utah and they're like, oh, you know, I get the 4-wheel drive and all of these things because they want to drive in the snow, right? And they don't understand that the snow tires make a bigger difference than almost anything else. Snow tires and then all-wheel drive. And some of these other crazy features that people get don't really actually make a very big difference. So there's this new thing where they make like these socks that you can put on your tires. And apparently the socks actually work really, really well. It's just that they wear out very quickly. So they're probably not worth it in the end. But that's kind of an interesting thing that's happening. Yeah, people know tires are important, but wow, it matters so much. Yeah. Well, like, like with the GR Corolla, you know, I saw this video where these people are like, okay, we're going to use the GR Corolla. We're going to go up the canyon on like the snowiest day, because this is supposed to be like a rally car, right? Well, yeah, but if you just have road tires on it, it's going to drive like crap. You need snow tires, man. And that's why it's like, so you need a second pair of rims so that you can just take the wheel off and put, you know, switch between them every year yourself. I guess I kind of have room. I'm going to have to I think I'm going to rebuild the steps that go up to the door. I do very much like these GR Corollas. Needs to be the blue one. Name blue. Ah, yeah. I want it. It's just maybe I should get it and then just go to the audio place and switch the speakers out and switch it for a bigger amp. Apparently the amp in this car is a big problem. Yep, the reason snow tires are snow tires anyways is just because they have better distribution of pressure and pathways for fluid movement. Well, it's not just that. So, you're talking about counterintuitive stuff. So the thing that I've learned is that snow sticks to snow really, really well. So what you actually want is you want a tire with those kind of holes in it that really grabs onto the snow and like the snow sticks to it. Because once you have the snow sticking to the tire, then the snow sticks to snow and then you get traction. Isn't that interesting? Because I think people intuitively think that it's about that they need large channels so that the snow doesn't stick to the tire because that's what makes it so slick. No, it's when it's really, really cold, and so the rubber is super hard, and then the tire is just wet and it's slipping on basically ice. If you have snow on snow, then you actually get pretty good traction. Larger picture though, I just don't want to buy a car right now. I wanted to wait. I wanted to wait 2 years, and then now that so it's kind of like, we're probably going to have to do it before the end of the summer. But if you have suggestions that are better than a Tacoma, I'm all ears. I could just get some sort of another luxury sedan. I could go get a Lexus, or I could do what everybody else is doing and get a crossover. Right? Part of my thing is I don't really feel the need to have a big car. But why not? An RX, for instance. A Lexus RX. The small one they don't make. Do they not make the gas one anymore? UX. But I could probably still get a gas one. I just need to go on to the local classifieds in Utah. Or no, not classifieds. Cars. Mm-hmm. 2017. Which year do you think I should go for? Maybe 2020. There you go. I love how they try and estimate the monthly cost. Let me filter it back. It should be between let's not go any further than 5 years. Are you knowledgeable in the DC motor or servo? No, I've never messed with that, nor the coding side of it. I tell you what, once you start getting into like hardware, programming becomes exponentially more complicated. Like programming stuff for the web in C# or like especially trading indicators in C# is easy compared to like writing stuff for Arduino applications, for instance. That's when it gets complicated. So there's a UX. I think these are hybrids though, aren't they? Come in today. Da, 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 da. That seems more like it. It's just like, you know, it's got an SUV-ish look, but it's small. Because I don't want a huge vehicle. Maybe I should go look at this car. I don't know. That back seat is a little bit tight. I know that he's got the seat like back like that and everything, but maybe I want a bigger one than the UX. Man, the treasuries, they're still like what? 3 ticks down? I guess you could have made 5 ticks from the cross, but man, that's tight. And the S&P 500, well, they're starting out bullish, but now that's reverting too. So this is going to be a tough day. Let's not forget, though. I tend to like lose myself and get distracted. We do have some big University of Michigan consumer sentiment numbers coming up. So don't let me, you know, lose what I'm thinking about. Here you go, RX F Sports. The interior on that is a little underwhelming, if you ask me. I guess it's not terrible. When Lambo? I don't think you'll ever see me buy a Lambo. There's no way. I don't think I could ever convince myself to waste that much money on a car. Here's the NX. See, the interior just looks like a regular Toyota interior to me. I guess the seats are nicer, but bigger back seat though. What color is your Bugatti? No. Here's an RX. Older RX. Like, I don't really feel like that's all that much better than my Acura. I guess I really would have to step up to get a really nice interior. Probably expecting too much. But I'm like, if that's the difference, what am I paying for? I might as well get the Tacoma. You sold your Audi A4? I'm told that the Audis in particular have kind of had a little bit of trouble as of late. What's with that big sell at 110.5? I really jumped down there. I did just hear the news squawk say something, but I think that he was just, you know, warning us of the upcoming news and stuff. So we do get PMIs too. S&P manufacturing PMI final in about 3 minutes. Yeah, Audis can be. So I'm told that you can get good deals on the Audis because basically, because they've kind of had a little bit of mechanical trouble recently, you know, people aren't buying them as much and the prices have like really come down.
Block
but
sell.
You still get like a full dealer, man. You still get the full dealer coverage. So as long as you just own it until the dealer coverage is done, you're fine. And there's still good cars. to like drive. It's just there's some maintenance involved. What is with that? But I was looking kind of seriously at getting an Audi like that, like an A4, until I heard that, and then I was kind of like, I think I'll stick with Toyotas. Maybe I can get the new one. I wonder. There's this new Toyota. Have you seen this? Dude, I really want to know why they just all of a sudden sell so hard. That's kind of weird. And the dollar is jumping there. I mean, it kind of suggests news to me, but I'm not seeing anything. Drive it like you stole it. This is this thing right here. So it looks like just a sedan, but it is actually a crossover sedan. So it's a luxury crossover that is just styled to look more like a sedan. So when you're in person, it just looks like a really monster big sedan. I could maybe get one of those. Looks quite good. Yeah, they do look quite good too, don't they? Like it is a car that they probably could put into like the Lexus range, but it's a Toyota. Let's see if I search locally for those. Do I get any of them? I think they were around last year, so you might be able to get a 2023. Yeah. But all of the ones that I'm seeing here have like no miles on them. Let's say that it has to have at least 2,000 miles on it. How many does that kick out? Okay. So the number is higher than expected at 52.2 versus an expected 51.5. So maybe that selling was anticipation of the ISM number. I don't know. I don't think that you would see that much selling on the ISM number, though. I don't think that was that big of a deal. There was just like what? It was 51.5. So it was just spot 7 higher than it was supposed to be. That's not like a huge difference. But perhaps they are front running Michigan numbers. Good morning, Obsidian. Welcome back. Did you're talking about the stock market? Has the stock market changed since AI? I'm going to say no. The market has been implementing the latest in machine learning and artificial intelligence technologies for like 10 years. So when that stuff did happen, did change the market, but that stuff happened like 2010. That stuff happened a long time ago, like 15 years ago. It was kind of funny to me when ChatGPT came along and people were like, is this going to change the stock market and make it so that like trading is, you can't trade anymore and things like that? And it was like, it already kind of made it so that day trading is really hard and you're not competitive for like 15 years now. But the large language models, not as... No. Maybe we get a huge innovation with a large language model that can incorporate logic, but... Till then. I would be very cautious about taking any advice from artificial intelligences. What was I doing? When I look for a used crown, it only gives me 2 of them. And one of them is in St. George. I feel like that they are asking way too much for that one. I don't really like the back, but the front is good. And then the interiors. You get a pretty big trunk. Wow, it's actually a huge trunk, actually. The interiors are nice. Well, it's as nice as the Lexus, at least. Decent back seat. I think I would rather have that than the Lexus RX, if I'm honest. Though I think it would want it to be leather. Maybe that's why the other one was more, because that one had a fabric interior. Yeah. That explains it. You know what else? I'm not a huge fan of these all digital gauges. What do you guys think about all digital gauges? Because I kind of think that it's going to date your car. Yeah, do you think ChatGPT is going to change the stock market? You have no idea of the level of machine learning that hedge funds have had for years. Exactly. Markets always need liquidity somewhere. It won't ever change. Yeah. And you know, it was going back to that thing I was saying about the Veritasium video. Like, it was a very good video, but one criticism I would have of it is that at the end he was speculated, and I think that he was like, because what happened in that Veritasium video is he got the information that I've kind of been trying to relate to people this whole time, right? Which is that your trades have an effect on the market, and as you trade it, it removes those inefficiencies from the market. So Veritasium kind of takes the sensible extension of that, which is, well, as we discover more inefficiencies, eventually we'll remove all of them, right? No. Because the inefficiencies are created by the very structure of the market. So the inefficiencies will always exist. There will always be trading. And there will probably always be human trading, for that matter. I think if you got to a market where like literally everything was being done by robots, it would like blow up, and the humans would all make tons and tons of money, and they would go, oh, maybe we don't want to do everything with robots. Yep. Hedge funds invest millions, billions a year in staying cutting edge in the latest technology. Yes. Banks are essentially technology companies now. Like Goldman Sachs is just as much of a prestigious technology company as Google and Apple is. And having that on your resume is treated similarly, even though not as many people realize it, but the people that are recruiting know it. Because the whole thing is that in order to do this cutting edge stuff, you have to have data pipelines and all of this crazy infrastructure to do it. Oh, hey. Nice. I had made an alert at work to deal with a certain sensitivity that we have. And last night they did a deployment and it triggered, so it works. And everybody's super happy about it. Well, that's why markets still show the same stuff just like 100 years ago, zero sum. Well, yeah, it's kind of a weird and almost contradictory thing, right? Because markets are the same as they were 100 years ago, and yet in many, many respects, they're dramatically different as well, right? Like, there are inefficiencies that you could have taken advantage of 100 years ago that you can't take advantage of today. But kind of like the perplexing behaviors about markets, the things that were like, well, why is it like this? Shouldn't it not be like this? And it still is. Yeah, those things will always be with us because it's the structure of the market. Like, it's the very fact that we trade on a limit order book and the dynamics of that causes the game to play out the way that it does. And if you were to change that, you would have to move away from using a limit order book. You would have to move away from it being a stock market, frankly. And you know what? That could happen. From a philosophical point of view, I can see the case for why it might happen. Because our markets are essentially designed to deal with one very specific problem. This is really what it's all about. This is why capitalism works so well despite its many, many flaws. Is that the biggest problem that we deal with in our society is getting the goods to where they need to go. Getting the capital distributed to where it's actually needed. That's the biggest problem. So if all of a sudden everybody needs a certain type of good, demand for that good goes up, and then there's all of the responses that come out of the market. Okay, so now we raise our prices. That gives us more money to be able to produce more of that particular thing, and we can make more money from it. And then that creates supply elasticity and demand elasticity, and the whole thing revolves around paying money based on what the supply and demand is, because the biggest problem in a modern economy is, again, getting the capital to where it needs to go. That might not be the future, right? I can see this future where practically everything is automated and we have insane amounts of productivity, and all of the sudden supply and demand are not the biggest problems anymore. Like particularly labor supply, right? So when you think about that in as it relates to labor supply, right? Right now, if you're in computers, pays pretty good because only so many people can do that. There's a strong need for computer stuff, and there's not very many people that can do it very well. And so especially certain kinds of experienced senior developers can make a ton of money in this economy because of the supply and demand dynamics. But what happens when you have machine learning that basically makes the labor supply for a huge swath of activities in the economy, basically makes the labor supply infinite? Then what? Supply and demand are no longer the biggest problems, are they? I think at that point, the biggest problem is innovation, right? The thing that would be in strong demand at that point would be innovation. And the robots maybe can't necessarily do that. And people maybe necessarily can't do that, right? You turn into an economy where like everybody is basically trying to create their own innovation and sell it. This is where I talk about the micro investing future that I think could come about within our lifetimes, where certain laws get changed and so forth so that it's easier for you to offer equity in a company, and everybody is starting their own tiny company and selling equity in it and things like that. And everybody is getting the help to start their own business, and because the innovation is like the biggest roadblock, and so it's your idea is the thing that will really, bring capital to you, right? In a world like that, you might not want markets to function the same way. So, I don't know. Go trade hundreds lots of ZN with a real account. Why? Why do you want me to trade big? Really should. I mean, honestly, if I was on here every day and I was trading like $100,000 account in treasuries and like swinging big and catching huge swings and making all this wild stuff, I probably would have a ton of people watching, right? Is that what we really want? Because there'd be some nice things about that. I mean, I'm doing pretty good now, but man, if I had a super successful, $1 million YouTube channel on top of that, think of all of the crazy stuff that we could do. That'd be so cool. But then we wouldn't have this where there's only, 3 or 4 dozen people watching the stream, and I know you all really well, and you all have the opportunity to ask any question and to steer the discussion in any direction about what you want to talk about. And you can get the maximum amount of help that we can provide through a stream, that's really valuable too. And right now I'm kind of like, if it happens, it happens, but I don't care enough about it happening to really, really push for it, because I'm okay with it being the way that it is right now, and I don't need it to be more. The question is, what helps us the most as traders? And I kind of think that right now what helps us the most as traders is the stream as it is today and starting a fund. Haven't really talked about the fun thing today, but we should talk about it. I want you guys to go and get your Series 3 so that you can help me with the fund. Okay, so here's the number. Wow. Manufacturing prices paid 52.5 versus an expected 53.2, so that's a pretty big shift. And then the 5-year and 1-year inflation numbers come in line. So they're still kind of running into this ceiling up here, but they're reacting quite bullishly in the treasuries to that number. Make 1562.50 a tick. Should. Can you imagine just coming in and just every day go and make 1 tick and then be done with it? I mean, if you had $500,000, or sorry, you wouldn't need $500,000, would you? You'd need $50,000.
Block buy.
But let's just say to give yourself enough room that you want double that, so $100,000. Oh yeah, ZN is liquid enough to do it. Although I kind of suspect that ZN will also kind of react to and fight you if you're putting 100 lots in. Could be wrong, but ZN might give you trouble if you're putting 100 lots in. What's the requirements for a block buy? It is 3,000 right now. This is what I have input. So there was a market order somewhere in there that was more than 3,000 contracts. Actually, looks like it was a sell. At 16. I'm starting to see some signs of a liquidity hole forming here. I was kind of thinking about, should we try taking it short from 18.5 again? And now I'm seeing the hole, so I'm kind of starting to doubt that it will do that. And if it does do that, I think that they could maybe have another little slip. And then I have to worry about people stopping out, creating a trend up. So it's probably best for me to not touch it there at the moment. How do you identify a liquidity hole? So what I was seeing there is I'm going to see like really big trades in there. So like, you know, there's a big bid and then, you know, selling is hitting into that bid and there's like a big iceberg, like 5,000 contracts, right? And then it ticks down and back up and there's only like 500 contracts. It's like everybody that wanted to trade there traded there, and now the market maker's not putting a whole lot of liquidity up. So they just did it again. There was 5,000 traded on both sides. There's still a little bit of bid liquidity, but can you see how easy it is for them to tick it up and down now, and it just keeps ticking back and forth across that price? So that's kind of a sign to me that the market makers, the liquidity in this area is kind of a little bit exhausted and strained. So of course, if the market buyers and sellers decided to continue to come in, they could potentially push it up through here, right? But basically you get this area where it's very easy for them to tick it up and down at 16.5 and 17. But it will be very difficult for them to tick it above 18. They're going to need a lot more volume to do that, and that's what kind of creates the liquidity hole. So, to review, big transactions or staying in an area too long to cause it, and then signs that the latent liquidity are now low as a result afterwards, meaning that it ticks back and forth across a price multiple times, and each time the amount of liquidity that the market makers put up is low. And it's low on both sides. Like 500 contracts, you know, it takes less than 100 to 500 contracts to tick it up and down for like several minutes. Yeah, it's like we're observing here, it's just like two-way trade. Exactly. Because, like, what happened was you got this huge surge of volume, and then it all absorbed in one spot, and then that surge of volume kind of died off. And so you've got, like, this mountain of offer liquidity above us and a mountain of bid liquidity below us. But then it's very easy to tick around in here. And so what happens is they just let it stay in there. Now, that doesn't mean that it's not going to go up. Because, again, if they have the market orders, they could do it. And we, at this point, okay, so now they're trading 18.5. I think it will need to go a little bit further than that. The overnight was, what was the overnight? Oh, the overnight is all the way up at 23.5. Okay, but there are some, like, key levels around here. So you do have to worry about, like, people stopping out and continued trend. But, I don't know. What you will tend to see is like move, liquidity hole, move, right? And you can see it on the chart too. Like, look at the 10-year here, right? I said signs of a liquidity hole, like right here, right? And then what happened? There was one. Maybe it's short-lived, but there was one. And even though we've pushed back a little bit, there's kind of going to be a little bit of a tendency for them to possibly fall back into that hole. So that's another one that they'll do. So like usually, let me draw some pictures here for you to show you how it kind of tends to go. Is you get this, right? But you can also get this, right? And then, you know, it might continue up, it might continue down. That just depends on how much more liquidity they need, how much more they need to trade, right? Yep. Do you feel or agree with the roughly quoting from memory 45? Yes. So the duration of this thing when it's a real liquidity hole. So right now we're just coming off of news. So you're going to get these little liquidities holes that are relatively brief. Okay. But eventually it will settle. It will form a real long liquidity hole. And that will probably last for 45 minutes. Meaning, like, let's just say for the sake of argument that this 18 half right now is going to be the liquidity hole. I don't think it's going to. Oh, look, there, it just ticked up again. Okay, but let's just say for the sake of argument that it did do that. It'll probably do it like this. And here's 845, so it'll probably go all the way over to here before it either moves up again or it comes back. In this situation, I think you should expect to see like a spike, post meta order mean reversion, and then possibly another one. I don't know. I'm trying to decide though. The question is, okay, second leg, possible. We started 275, we're now 270, 281 max at one point. So there actually wasn't like a huge net change in cumulative delta. So the market orders are not all going one way. So that alone kind of has me like in a not feeling very good about trying to take a trade on this. When I look at what was the news that it was based on and the day and all of that sort of stuff, I'm kind of leaning towards that you would get a double distribution, push a little bit higher, but not too significantly. So like something where it really seems like it's breaking out convincingly, but ultimately is kind of a dud, right? Because it is a Friday, and I'm not sure that consumer sentiment is like huge, groundbreaking, market shifting kind of information. It's enough for a decent move here now, but I don't think that, I think that by Monday we probably forget about it, Yeah, and you're right. We got a pre-market high, yesterday's high. So this level right here is kind of like a key level. But we did break that overnight, right? So there was this level right here. Let's say 21. So where we're at right now, 21, 22. That's been kind of resistance for a while. And if you come back to a daily chart, you can see that it's like right at the 200-day moving average. So that seems to be acting as resistance, but we did break that line overnight, and we do appear to have broken it now. So, oh, there you go, right there. Oh, I wish I had not changed that screen so you could see it. There was a little bit of a stop run there. So now we are kind of getting signs of people puking because like it's been convincingly broken. We broke the high and the initial balance low. Interesting. With the way that it's reacting. So remember we saw that selling before the PMIs, and we were like, whoa, why is it selling so hard? That's really weird. Maybe they are front running the Michigan numbers, and then the Michigan numbers end up being the market reacting super, super positively to them. So that's really, really weird. I guess one thing I should say, I said that like the cumulative delta is kind of iffy. That's only the case in the 10-year, right? In the 5-year, you got pretty strong, clear volume coming in, and you can see the yield curve steepening considerably. So that doesn't necessarily make it a very good trade for us in the 10-year. Like you can see here, I think, actually maybe could have made 15 off of that. But we are kind of, if we were to trade the 10-year, we kind of would be on the lagging side of the curve. It would probably be better to take this 2-year. Plus the 2-year is right at a weird level, 4.5. So it looks like the volume was on this higher side here, so that's interesting. Well, they went and they tagged that overnight high, and there was some stop runs as it happened, and now they're coming back very quickly. So, some stops, but it's unclear to me as of yet if this is like really truly a breakout yet. Could be like a false breakout. Remember this area, though. Markets remember areas of liquidity. So that's kind of like my take is that when you get a liquidity hole, that after 45 minutes, it doesn't matter anymore. You know, the statistics that I've seen relating to like point of controls and things like that, I think are based are a result of volatility and are, you know, the volume profile side of it is kind of just dumb luck. Yeah, so now I think you're right. Like, you see if this 20, between 20 and 21, if that acts as support. So they're kind of falling back to the scene of the crime. But if the buyer is really still there, he will start, he's going to want to keep buying it in the 21.5 area. He'll just keep buying it there. Getting some pretty convincing action in the Japanese yen. We are getting a Fed speaker at the moment. The other issue that we got right now is that it is a Friday, right? So they like to make their move here and they want to be done as quickly as possible. How far do you think they're gonna get? Oh, this is funny. Like, with my one contract that I have on. Oh, I guess I never. Yeah, 250. Yeah, it's down 250. So it's been a $500 swing. I don't know. I don't necessarily see those numbers as like, okay, cool, the Federal Reserve can cut interest rates this year and yada yada. Like, I kind of feel like those numbers didn't really tell us anything other than that, like, nothing scary happened, right? But that's the way the market has been lately. It's like they're hedging for the scary number to come, and then it doesn't come, so they buy it up. I'm thinking about, should I have sold it over here? I think that I could have justified selling it over here in the micros, but I don't think that I would have, even if I didn't have this swing and I was a little bit more involved. I think that it was still a little bit iffy. I didn't have a very clear reason to think that they would push convincingly through the 20s. Even now, I'm still a little bit like that it could come back. Watch is gonna take another leg further just because I'm so cagey about it, right? Whenever I act like, oh, I'm really not sure, that's when they just keep going and going and going and going. And really surprise me. Well, it's been about 20 minutes. Let's see if Zero Hedge has anything about some of these numbers that we're getting. Haley, nominating Trump means suicide for our country. Yeah, now her true opinion comes out. Now that she's the only one left in the race. Dumb money almost back to even making the same mistakes, says Zero Hedge. Okay, let's read with the what is going on with U.S. manufacturing PMI data. After yesterday's ugly data, S&P Global's U.S. manufacturing PMI offered a ray of soft hope with an acceleration intra-month from 50.7 in January to 51.5 preliminary in February. But in the face of the S&P's global gains, ISM manufacturing survey puked from 49.1 to 47.8, well below the expected jump to 49.5. Wait, was that? Oh, yeah. ISM manufacturing. Prices paid 52.5. Down from 53.2. And ISM weaker than anticipated, 47.8 to 49.5. Okay, so I kind of missed that number up at the top. But as the ISM manufacturing PMI being weak, considering that manufacturing has been weak for some time, really a big deal. Let's read on. This is the biggest divergence between the two manufacturing surveys in at least 3 years. S&P Global says U.S. manufacturing new orders grew at a strong pace. That was the fastest for 21 months, but ISM says it contracted. Well, but ISM is leading. Like, S&P is... Oh, I don't know. Okay, anyways, S&P Global and ISM agree that selling prices increased at the steepest pace since April 2023. S&P Global saw employment pick up with the quickest rate of job creation since last September, while ISM saw employment contracting at its worst since June of 2020. Oh, and aluminum prices are up and downhill. Manufacturing is showing encouraging signs of pulling out of the malaise that has dogged the goods-producing sector for much of the past 2 years. After a long spell of reducing inventories in order to cut costs, factories are now increasingly rebuilding warehouse stock levels, driving up demand for inputs and pushing production higher at a pace not seen since early 2022. There are also signs of stronger demand for consumer goods linked in part to signs of the cost of living crisis easing. Firms are consequently investing in more staff and more equipment, laying the foundations of further production gains in the coming month to hopefully drive a stronger and more sustainable recovery of the manufacturing economy. Problems with shipping disruptions and supply chains earlier in the year have eased, taking some pressure off input prices, though factory gate prices are recovering amid stronger customer demand, which will be an area to watch closely in the coming months as policymakers address the appropriateness and timing of any interest rate cuts. So, S&P Global sees manufacturing expanding at its strongest since June 2022, and ISM sees it contracting for the last 15 months. I trust the ISM more. The S&P is kind of lagged. So that's interesting. That is not something that I caught about the numbers. But I'm also, the thing that I'm kind of wondering here is, okay, so we got a pretty strong move up. We got University of Michigan and ISM manufacturing numbers. And the ISM manufacturing numbers were weak. So that's good for the market overall. But is it as good as the market is suggesting it is? I'm not really seeing it. But I think that we're probably up to 18.5. Like, the initial move was to 16.5, and then we were to 18.5, right? I am of the opinion that everything further from there is just stop runs. So, probably not actually anything reflective of the news. But can you ever actually know? Hey, Dumb Money almost back to even making the same mistakes by Lance Roberts via realinvestmentadvice.com. Over 2 years, retail investors, also known as dumb money, are almost back to break even. A recent chart by Vanda Research shows that the average retail dumb money investor portfolio still sports a drawdown despite the markets making new all-time highs. Such is unsurprising given that retail investors often fall victim to the psychological behavior of the fear of missing out. The chart below shows the dumb money index versus the S&P 500. Once again, retail investors are very long equities relative to the institutional players ascribed to being the smart money. The differences between smart and dumb money investors shows that more often than not, the dumb money invests near market tops and sells near market bottoms. We can confirm the smart/dumb money analysis by looking at the allocations of retail investors in stocks, bonds, and cash. With markets overvalued and hitting all-time highs, it is unsurprising that retail investor equity allocations are at very high historical levels with low holdings of cash and bonds. Of course, it isn't that retail investors are chasing the markets higher. It is what the dumb money is chasing that is the most interesting. Last week, I discussed the relationship between the NFIB data and the Russell 2000 index. As I noted, the recent exuberance for small cap equities is also unsurprising given the long period of underperformance relative to the S&P 500 market capitalization weighted index. The hope of a catch-up trade as a rising tide lifts all boats is a perennial bet by investors, and as shown, small and mid-cap stocks have indeed rallied with a lag to their large capitalization brethren. We see that exuberance in capital inflows into small capitalization companies following the 2020 stimulus checks, which fueled an entire generation of meme stock traders on Reddit and the Robinhood app. The hopes for quick riches from a small cap stock going to the moon, along with a lot of hype on social media apps, has increased the speculative craze. At the same time, to leverage their bets, these retail traders have piled into call options. The risk with speculative call options is that they are either a win or complete bust. Therefore, the speculative risk in trading options is dramatically higher than buying the underlying companies. However, retail investors are directly piling money into small cap stocks as shown by increasing weekly inflows, particularly into small cap growth versus value with substantial acceleration starting in November 2023 and increasing in 2024. As noted above, the degree of speculative risk-taking by retail investors has always ended badly. This is why the financial market considers retail investors as dumb money. Of course, this brings us to whether investors are again making the same mistakes. Over the past decade, the Fed's ongoing interventions have led to a massive increase in the leveraging of U.S. corporations. Of course, with repeated financial interventions combined with a zero-interest policy, why would corporations increase the use of cheap debt? The increased debt load doesn't provide an inherent risk for large capitalization companies with massive revenues. However, for small cap companies, it is a very different story. Weaker economic growth continues to increase in the number of zombie firms. What a zombie in the financial world, to wit. Zombies are firms whose debt servicing costs are higher than their profits but are kept alive by relentless borrowing. Such is a macroeconomic problem because zombie firms are less productive. Their existence lowers investment and employment at more productive firms. In short, one side effect of central banks keeping rates for a long time is that it keeps more unproductive firms alive, which ultimately lowers the long-run growth rate of the economy. According to Axios, was a quote. The chart below from our friends at Kalash Concepts shows the problem facing the dumb money crowding in small caps. Percent of Russell 2000 firms with negative earnings is increasing. With nearly 40% of Russell 2000 index sporting negative earnings, many have issued debt to sustain operations. Unlike many companies in the S&P 500 that refinanced debt at sustainably lower rates, many of the Russell 2000 were unable. The risk that if higher interest rates remain when that debt wall matures could further impair survivability. Interestingly, since the beginning of the year, we are seeing borrowers return to the market for refinancing. As shown, there has been a surge in B- junk-rated borrowers who are already taking on debt at higher rates to refinance old debt. While we are at very early in the cycle, the risk to the underlying balance sheets is rising. And as I'm saying this, the treasuries are pushing to another new high here. They have barely backed off at all. There was a little bit of a distribution at 24, but they're already pushing again. So it looks like there was a $10 in that for me. I'm actually kind of proud to not be a part of that crowd. You know, I haven't put too much more in the markets since 2020, but you know, I was kind of favoring small caps. So I think that, but this has been something that has been on my radar, which is how much debt do these companies actually have relative to earnings is kind of an important factor right now. As we concluded previously, there are risks to assuming a solid economic and employment recovery over the next couple of quarters. With consumers running out of savings, the risk of further disappointment in sales expectations will likely continue to weigh on small business owners. This is why we keep a close eye on the NFIB reports. At the moment, the dumb money is chasing momentum amid a bullish frenzy. Unfortunately, such will likely prove disappointing when expectations eventually collide with fundamental realities. Your portfolio is just shy of 30% bonds? Well, that's what it should be. But why would you put the bonds in your Mad Money account? Assuming that we're talking about your, just a trading account. I guess you're a little bit older than me, that it should maybe be 40%. Oh, it's not. If it's an IRA, then that's what it should be. No. That's not what I mean. So, you have your 401k and you have your IRA or Roth IRA. And then if you're investing beyond that, you're investing in what I call the Mad Money account. I honestly recommend that people have a Mad Money account before they're fully funding their retirement accounts. And I'll tell you why. There's saving for retirement is hard, and most people don't do it. And part of it is that it's not necessarily available to them. But even for the people that it's available to, there's just a lot of people that it's available to and they don't actually do it. And there's always kind of been this idea in the financial community that it's just because people are financially illiterate. All we have to do is teach them about these things, and then they'll know that they should be, investing in their tax advantaged accounts and saving for retirement, and that will solve the problem, right? But what we find is that that's not really actually the case, that there are a lot of really financially literate, smart, rich people out there that make really bad financial mistakes. Part of the problem is that it's very difficult to keep it up over decades of time and things like that. But my argument and my opinion on this is that it's not enough to know. You have to do. And the reason why so many people make those big mistakes and mismanage their retirement is because it's not something that they're thinking about on a daily basis. or a weekly basis. That's why I think it's a really, really good thing. It's a really useful exercise to go through to own individual stocks and go in and do a review and research on those stocks that you own every week to keep up on the news and what their earnings are and all of that sort of stuff. Because now you're thinking about it. Now you're practicing, right? You have to do. And so that's why I feel this advice, because what people will tell you, what the experts will tell you is, don't buy individual stocks, just put it all into an index fund. Well, okay, if you're trying to maximize, give yourself the best chance of max gains or whatever we call it. I'm trying to remember the word that I use. But you're not looking for excessive gains, but you're just looking to like maximize risk reward. Okay, then yeah, you should put it in an index fund. But you don't learn anything from doing that. And so I say that, if you're making some contributions into your IRA, that it's totally cool when you get your tax return back or whatever the deal is to put a few $1,000s into what I call a mad money account, which is just a regular brokerage account outside of a tax advantaged account. Okay. And in the Mad Money account doesn't say anything about like what the duration of the trades are or anything like that. Like I would like to be a little bit more involved in kind of swing trades, and maybe I might do that more often in the stocks. But for the most part, what I do in stocks, I buy it, I intend on keeping it for like 10 years. Right? And I have my 5 stocks and I read about them every day. Not every day, but every week. Make sure that I know what's going on with them. It's hard. I think part of my problem was that, I want to go for small cap companies and stuff. So that reminds me, actually, now that I'm going through this, because we haven't looked at the stocks much this week, after I kind of got all that stuff set up, I think part of it is that I'll come over to these and then I'll see some of these smaller stocks on the watch lists being up like 5-10% on a day. And it always makes me feel bad. Like, oh, I missed that. So DWAC is down 5% today. Nvidia's up 2%. Ooh, American ARRNF, American Rare Earth Resources, is up 10% today. And I think it's up like almost 80% over the past month. But that's just been like, there was like a huge jump on that kind of news story, which I don't actually think justifies it being as high as it is. So I expect that one to come down overall. But they're in the, they're in the post gain chop. So that one probably moves 10% today a lot, right? Might be if you're day trading that might be kind of a, yeah, you're just guessing sort of a thing. CCJ. Okay, but what I would like to see is some sort of a measure of earnings to debt. Let's see here. Debt, earnings, debt to income ratio. So I think current ratio has to do with like your liabilities compared to your assets and stuff like that. Forget what's the leverage ratio. We covered this one on the Series 65, but I don't remember what it was. Total debt over, oh, and I forget what EBITDA stands for. Stands for EBITDA. Earnings before interest, taxes. Gotcha. So total debt. Oh, so I think I do want leverage ratio. Leverage ratio will probably do it. Oh, annual. So for that, a lot of these companies are unprofitable, huh? Because if you come back and you look at their EBITDA, is that how people say it? I have it on there, don't I? Cigar. Oh, maybe I don't. Okay. Annual EBITDA. So probably a lot of these don't actually like have earnings. No. Okay, I guess maybe they do. But I was interested specifically in these ones in the energy section. Oh, of course, ExxonMobil is huge, but COP. Which one's the one that I was... Oh, ConocoPhillips. 2% today, huh? Okay, well. Or no, what about these ones right here? Yeah, these ones. Maybe I just don't get the data for leverage ratio. Okay, whatever. Prox is doing well today. Supermicro's doing well today. AMD. So it sounds like chips are basically doing pretty good. Amgen. Interesting. You know what? So one of the strategies that I'm always interested in is Dogs of the Dow, which is basically like you take the dozen or so worst performing stocks of last year and you put them in a portfolio and they tend to outperform. But so far this year, that trade hasn't been going very well. These are the Dogs of the Dow this year, and I would say overall they're underperforming. Soundhound down 12% today. Oi. Taking the hero trade at 111 even? Oh. If it gets there, is that what you mean? Anyways, basically, I need to make sure that I'm getting companies with less debt, essentially. Index funds are likely not going to be making money for the next 10 years. I think there is some reason to believe that, yeah. It seems to me that that might not actually be what the index does, though. Like you see the way that it's going right now, right? That it's only like 5 stocks that are pushing us to new highs, and everything else has kind of just been going sideways. I think that you're going to see this thing where the if you're a stock picker, it'll probably be a little bit rough. You're either going to do really, really well or you're going to underperform. And I don't know if there's going to be much middle ground for the stock picking world right now. Because the thing is that the index, they can change, right? the index can go and always make sure that the companies that are doing really, really terrible get dropped out of the index, and the companies that are doing really, really well get added into the index and whatnot. And so from that perspective, I think that you could say that the index like continues to go up. But if you were to do something like buy all 500 of the S&P 500 companies today and then equally distribute that money and then don't readjust, like when stuff gets removed from the index and that sort of stuff, you don't change anything, then it's probably is like it won't make money. Yeah. When we see some weakness in the biggest stocks, then it's good night. You know, with the way that things are going right now, I kind of wonder if this is going to be like a slow burn. Like that we're seeing like the peak right now, and that after this, it does decline, but that it's a super slow, painful decline. You know what I mean? Because like what they were talking about, like the debt levels and the higher interest rates is just really bad for small companies. So basically, we're creating an environment that isn't really very good for innovation, is it? We're kind of feeling those consequences now. And that kind of means that like maybe you still grow, but you don't grow as fast, right? But the split side of that is that volatility probably still remains relatively low. So that might help inform some of the sorts of trading strategies you might want to go for. Either sell volatility or go for YOLO trades because the options will be cheap, right? Well, we got about 15 minutes left. I would say that the treasuries have had a pretty convincing pullback. So my guess is, especially because of how this cumulative delta shifted. Holy crap. I haven't seen that before. You see that where it's like flat, and then all of a sudden, stop run. Yeah, I think somebody puked in the 10-year. But then look, after that, it's flatlined. So this right here is probably post meta order regime change, right? So let's just take it from 8:30, 45 minutes from 8:30, so 9:15. So 15 minutes from now, then probably that's done. But then is there going to be another leg? And I'm going to guess in this situation, because it's Friday, that it's not. So, and if they try and push out before that 15 minutes is over, they might struggle a little bit, but they could probably still pull a little bit more out of it. So my guess is that 28-ish is a good place to be. Like, not a good place to be, but like it's probably going to hang out there now. They've made their money and they're going to go. They're going to go home for the weekend so that they can go and watch Dune 2 tonight, right? Do you all have tickets to see Dune? I'm going to see it tomorrow. How is the liquidity in bond options compared to index? Oh, I don't know, actually, to be honest with you. I've never looked at the book in bonds. I would think that it's pretty good, but I don't actually really know. I'm browsing through Reddit here, and there's a post on r/garlic coin, which I don't see stuff over there very often anymore. But the post is titled, and it's all in caps, "The Anunnaki aliens are adopting garlic coin to restore their atmosphere. Garlic is the new currency of Planet X, the 10th planet, home to the Anunnaki aliens. I'm putting the remainder of my life's savings of $500 into this right now. I accidentally bought 750 of gold coin trying to buy this, but it's okay. This is one of the greatest projects created by our God King." My gosh, what? The Sumerian tablet tells us of ancient beings altering chimpanzees to create a slave force after their reptilians revolted. However, Anunnaki secretly altered Enlil's original design for humans to harvest them, gold, and instead created a 15,000 year vision for humans to create garlic coin. The fuck? I mean, I get what he's trying to do here, but it's like a really terrible one. But like, it's good because it's so terrible. So, fun stuff. So probably a good time to go. And I don't check on the garlic coins as often as the other things, but let's go check it out, huh? Well, it's up today. It's up on the month, so I remember when this dip happened, so they've recovered that dip, huh? Back up towards 2.5 cents then, essentially. When was it? In 2020 when they spiked up to like 2 cents, where we were like, whoa. No, it was more than that. Oh, okay, so they got up to 15 cents. Oh, I wasn't reading the numbers down at the bottom correctly. Yes. So it's over here. But we are almost to where we were before the huge spike, so that's good. That means that maybe we will eventually see another big spike coming. I can only hope. So when it was worth 15 cents, I was kind of like, what? Like P2 says, right? It says right there. That was me. I was like, oh, this is getting a little crazy, guys. Too bad there's like hardly any exchanges with it. So there would not be enough liquidity for me to sell anyways, but I can dream. Okay, they did make a new high. But it's not, it's not really, I don't really see it coming in a 5-year, maybe a little bit, but it's probably coming in from over here, huh? Nope, in the 30-year. Oh no, that's really interesting, actually. Why the 30? It's just playing catch up, perhaps? I don't know. It's a little weird. That one's a little weird. Like a gold, though. Like, gold really moved with that. That's good for gold. Actually, let's come back on a daily chart on this one. Oh, wow, yeah. That's actually really big for gold and silver. And I bet silver's probably even better. What about copper? Copper's moving, too. And the Japanese yen is moving up here. I don't know. So the Japanese yen was up more overnight when the Ueda was making comments and stuff, so So the question is still like, where would they settle? At the moment, I'd say it's pretty likely that they still settle at 27.5. But I am starting to wonder if we're not in a trend days situation. I mean, I'm not seeing that in the volume, nor am I seeing that in like what I think this information means and the number of orders that it could potentially drive from the news. But if there's like people stopping out of shorts, then that would be a different thing, right? Now I only have one contract on, and I should be dumping it here. So I don't know. Could that happen over the next week? Eek. I still think it's mostly stop outs though. Oh, oil's having a little bit of a ride here. Yeah, this whole setup is kind of interesting because next week, you know, you got all of the big data and everything. Although I don't expect the jobs numbers and so forth to be weak. And then, because you kind of have to come back to like a daily chart, right? So if we're convincingly breaking back above that 200-day moving average, well, maybe the 50-day moving average is a good upside target. Or basically, you can erase the downside from that PPI. Because, right, this was PPI, and this was non-farms, right? But that's just kind of the thing is like, okay, so like what are the next big levels that they're going to come up to? It's kind of washing that stuff out. I think that you would really need to see some really weak employment data to get back up to here, you know? So could set up for some really interesting trades. I do feel a bit of FOMO on this one though. Like, I think that on this, I got two things going on this one. One is that, you know, I haven't really been day trading a whole lot lately, so I'm just kind of not in the mode. But then the other thing was just that I just did not recognize that news as something that would really push us up above here and create this kind of stop run and everything. So I think that I probably could have seen that, but I didn't. So I think I can call not playing this particular move a mistake. Like, remember, I was saying, oh, well, I could have made $10 here. That was like $20 ago. So, you know, I probably could have easily have made $50 if I had traded this and I just, you know, sat on it. Instead, I'm watching this swing trade that I have go back on me, even though I'm not going to do anything unless it stops out. So whatever, right? kind of wondering if they're gonna. And I'm reminded now about Octavius saying hero trade at 111 even. See, he's done pretty good with that, like the last, like what, 3 times? But I don't know. When it's like this, because it's already been, okay, so there was a liquidity hole. It was very, very brief. And then I would say, like, there was another one at 24 and 26. So you can see it, like, right here, 24 and 26. But each time, it did not actually sit through the whole 45 minutes. So, like, that, when it starts doing that, I start thinking trend day. I don't necessarily want to take the hero trade on a trend day, you know? I'm also thinking about sometimes I would get involved in something like this, like I'd go long and it would completely reverse on me, you know? And I get super frustrated. Well, then I look at this and I'm like, what are the chances of that happening? That they come all the way back like to 16 or something like that? I'm going to say highly unlikely. Wow, 16 was like after the news though, right? Like, that's pretty crazy, actually. That it's gone 16 ticks after the half of a handle after the news. Sorry, 32 ticks. That's, you know, it's like $500 a tick. Sorry, $500 a contract. That's really extreme. Doesn't that seem like too much? Except for that, it's probably stops. Even if it stops, that's probably too much, you know? Like those are big trades. I've always had a hard time getting 16 ticks on a single trade. Like if I'm doing one contract, getting 16, that's hard. Democrats lost faith in February as University of Michigan inflation indicator ticked up. Democrats' consumer confidence tumbled in February, the most since June 2022, and Republicans' confidence increased. Maybe their confidence was shattered by Biden's polling numbers or the start of a loss of faith that the Fed has won. Consumer sentiment fell in February for the first time in 3 months as current and expected views of the economy deteriorated. Buying conditions for durable goods eased, as did consumers' expectations for their personal finances. Consumers perceived few changes in the state of the economy since the start of the new year, and they appear to be assured that inflation will continue on a favorable trajectory. Sentiment is currently 8 points shy of the historical average since 1978. Finally, despite a continued strength in many stock market indicators, stock owners reported declines in sentiment, while non-owners for sentiment rose 5%. Don't you feel like that all of the economic numbers and stuff that we're getting are a little weird to be hearing when we're like at all-time highs? Okay, big block sell, so that will definitely kind of stop things. Oh, but we did touch 111. Interesting. Wait, where was the block sell at? Okay, well, there was about 4,000 contracts at 111, but that was a bunch of different stuff. The block order was at 31. I don't know. I'm kind of starting to like this idea of going short at 111, but I'm like too terrified to try it. And plus it's time for me to get going, so I get to you know, just pass on today. But I think this is a little bit of a wake-up call for me. Like, I think I missed this one. I didn't see this. I need to kind of take a look at what am I missing here. Why is it doing this, right? So I'll be thinking about that over the weekend. I will see you guys on Monday, though. And in the meantime, stay excellent, team.